We recently invested in our first syndication and would like to do more in the future. However, with minimums in the $50 to $100,000 range, this is something we would need to save up for, and then, of course, wait for the right deal. Any advice on where to save for this? It seems like a lot of money to be stored in high interest savings accounts at 0.5% or so. We also need it to be liquidable and likely would use it over a year or so. Is it better to consider things like crowdfunding or acre trader as they typically have lower minimums? Appreciate your input and everything you do. Thank you.
That's a great question, Travis, and one that I think a lot of white coat investors wrestle with. I mean, it's really a dilemma. I think the better real estate investments, at least the passive ones, are the private real estate funds. And they generally do have higher minimum investments. 50,000, 100,000, sometimes a lot, 250,000 or $1 million. And obviously, if you have to spend years and years and years saving up for that sort of a thing, you want to get a decent return on that savings in the meantime. But you also, that probably tells you something about whether you ought to be investing into those assets. If it takes you 3 years to save up 100,000 to put into a private real estate fund, maybe that's not the way you should be investing in real estate. So that's something to keep in mind. Now you have two alternatives. One, you simply invest in publicly traded real estate. Something like the Vanguard Real Estate Investment Trust Index Fund. That was my only real estate investment for years and years and years and years. There's no way I'd come up with $100,000 in any sort of a short-term way to buy into a private real estate fund. And now I have some more money and I have some more income and I'm able to do that. But I fully recognize that there are many white coat investors that can't do that. So maybe they just stick with publicly traded real estate. Maybe they look at some of these options that have lower investment minimums. Things like the crowd-funded companies. A lot of times you can get into a syndication for just $5,000 or $10,000 with them. There are also some private REITs, companies like Realty Mogul and Fundrise, that you can get into their REITs, which is a diversified real estate investment that's basically a bunch of crowd-funded investments put into one little REIT. And you can get into that for like $10,000 or $20,000. There are also access funds that, for a price and an additional layer being removed from management, will get you into a private real estate fund. It's still something like a $25,000 minimum, but it's easier to come up with than $100,000. So those are kind of your options. And if your decision is that you want to invest in private real estate funds, like the one we're going to talk about here in a minute, you probably need a reasonable plan to get there relatively quickly. If this takes you 3 years to save up the money, you probably shouldn't be investing in something with a $100,000 minimum. You're just not at that level of wealth yet. Not to mention, it'll be difficult to diversify it because, you'll only have one fund at that point. And so it's not necessarily a great idea for you. I would wait until you're making more money. And if you never make more money, go ahead and skip it. There are no called strikes in investing. It's okay not to invest in something. But if you can save up for it in a relatively short period of time, the only question is, how should you get a decent return on your money? And I think there's two options. The one I usually prefer is to just leave it in cash. And, if it's only going to be 1, 2, 3, 4, 5 months, something like that, no big deal to have it in cash. Now, you want to earn some money on your cash. Right now, I'm putting my short-term savings in Ally Bank. I think it's paying 0.6%. Now, 0.6% is not awesome, but you may have noticed that interest rates are really low right now, and that's about as good as it gets. I think Vanguard money market funds are paying basically 0% right now. So not a lot of great options there for cash. The other option you can do is you can invest it into publicly traded real estate. You can put it into the Vanguard REIT index fund, for instance. Now, this is far more volatile than cash, and so there's no promise that that money is going to be available in 3 or 6 months or whenever you're going to do this real estate investment to go into the real estate. But theoretically, if real estate's doing really well, that fund will do well. If real estate's doing poorly, that fund will do poorly. And so theoretically, you're already invested in real estate. You're just moving it from one real estate investment to another. And so I think those are the two schools of thought you can use to save up that $100,000 or whatever you need to get into a private real estate fund, if that's the way you want to go with your investments. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.